Ladies and gentlemen, welcome to this live trading today. I hope everyone has a great time so far, wherever you are in the world. For those who join us for first time, allow me to introduce myself. My name is Theo, and I'm an analyst and educator here at Admirals. So let's get started. Just let me check something here. Okay, so just to make it clear for everyone that this content is for general information only and is not intended to provide trading or investment advice or any personal recommendations. So let's share the screen and let's have a look at the premium analytics portal. Of course, let's read the news for the day. Today's top headlines. So China's reopening pushes inflation higher. Yes, Swiss trader Trafigura hit by substantial fraud, said it could lose almost $500 million. US sanctions 9 companies for moving Iranian oil products. After earthquakes, Turkey's haven for refugees in a ghost town. Adidas warns of losses stemming from Yezi fallout. South Africa president declares state of disaster over power cuts. Elon Musk's Twitter tenured drones criticism from Jack Dorsey, and Yahoo to lay off 20% of workforce. And guys, just to make us a comment on this event here. Lately we see so many tech companies like Twitter, like Microsoft, like this one, Yahoo, Amazon, Apple, Samsung, so many that we read on the news that they lay off significant amount of the workforce. And as the world moves more to the artificial intelligence structure and technology, it looks like they are, in my belief, in my opinion, it looks like they are trying to replace the people behind the screen with the artificial intelligence and the bots. So maybe from the investment point of view, and we will see that more extent in the investing webinars we will launch hopefully from March onwards. I will start some webinars about investing, purely about investing. Have a look at the companies and make our analysis, our research, and help you understand better the investing world and how to start invest and the approach of the investing, because it's a totally different story than trading. All right. So here in trading, we speculate on the price. Investing, we're going to have a totally different approach. We're going to frame our mindset totally different. Okay. So what's happening with today's major event? China's inflation rate from 1.8% to 2.1%. And today the focus will be on the Canadian dollar performance after the unemployment rate. It shows some weakness on the Canadian dollar because the higher the unemployment, more people they claim money from the government. Of course, it doesn't help savings, so more spendings they will follow, and that leads to weaken the currency. That's in a nutshell explanation, but definitely we will see how the market will perform, what the market participants will take positions, how they're going to position themselves and their trades and all this stuff. So good morning, guys. Good morning. Welcome. Patrick, good morning. I am new how to get on this page. You are on. We'll share the link with you. This is the premium analytics. You do have access through your back office. If you go to your Admirals website, here it says analytics, premium analytics. And if you have a live trading account with Admirals with us here, you have full access. Excuse me. If you have any difficulties, Patrick, please make sure you contact the customer support or your account manager, and they will sort this out for you. Raquel, hello. Rumen, Nanka, Janice. Hello, guys. Welcome. So I think it's time to move on to the charts, and let's check the pound first and the Australia dollar. It was something interesting based on our, there you are, Cherry. Hello, my friend. Mladen, we have some weakness on pound. Yes, we did. Guys, what did we said yesterday? That market discounts everything, price action discount everything. So what do we see here? First, we see the pound against the dollar. Yes, thank you so much. So here is the pound. I commented yesterday on the webinar that position I took based on the bullish engulfing, a bit aggressive position due to the fact that the price didn't tap within the strong area of demand, the support zone. It put this bullish engulfing though. However, the follow through wasn't that strong. We didn't even close higher. Yes, 2 days ago, and on the yesterday's webinar, I said that, look, we are within this range. It's not a trending market. We see these strong sellers here. If they reverse their positions right at this area, we should have seen more volume to the upside, that we didn't. And I explained that traders, unfortunately, they don't pay attention to the market character because they are monitoring 100 pairs and assets at the same time. So we try to find the easiest trade will pop out of the screen, but we have to really invest some time and understand what is price action indicates that maybe it's going to happen. So right at this point here, we had a higher high, a higher close yesterday, which is fantastic for the pound. However, it's been 1, 2, 3 bullish candles, and they didn't manage to reverse even half of this bearish momentum here. So what does it telling me as a trader, as a speculator, that hey, maybe this market is a bit weak, it doesn't move, it's not on a motion for some bullishness. Maybe it's gonna come here and it's gonna decide to push. Guys, everything is maybe. We want clarity and high probability in trading. Do we have a clarity? If yes, we initiate the trade. If at the point we initiated the trade, after few sessions, we see that the market is not doing what it's supposed to do, then we better change our approach. As David posted, shorted pound US dollar during New York session for 75 pips. Awesome, awesome. Congratulations. Yeah, we had this bearish engulfing here. The market sold off also, but this order block here, maybe David, that's what you were looking at. Maybe this order block, and maybe you went down to the lower time frames. Whatever may be reason, it was a good call, and congratulations. Euro against the US dollar. Sideways move here. We expected to see some push to the upside due to this dodgy length, dodgy candle. The move to the upside didn't happen. We are between moving average support and we are between horizontal resistance. So how much room for the market to push? We see that the buyers, they didn't create a higher close yesterday, and maybe the market is going to drift sideways. It's going to consolidate. Who knows? Who knows? And we are not here to try and understand what the market will do in the next move if we don't have our structure in place, the price action right where we want to see it. Let's say a bullish price action on support, a bearish price action on resistance, and we make our decision based on these factors. US dollar against the Swiss franc. This area of resistance here, a short-term resistance based on the daily chart. This area of support, the market, we said, can easily come and retest this this area at the bottom before it's gonna push to the upside. For some advanced traders, they could spot a development of the inverse head and shoulder here. My drawing wasn't that good. So that's the head, that's the left shoulder, that's bullish engulfing, indicates maybe the development of the right shoulder. So if the price breaks higher than this, we have a nice higher high, although some obstacles around here, but this accumulation of the pattern, I believe it's much stronger than this area of congestion. And we can see a move to the upside. We can keep an eye on that for this pattern. Johan, please remember NGAS. Okay, we'll go through NGAS as well. Australian dollar, although it bounced from this support, many factors on the support here. It gave 150 pips, and the average true range is about 80 pips. One of the strategies I do based on the average true range, the ATR indicator, is to find the area of support, like right the last pinpoint, like this one here. It's a strategy. If you want to try it. And I go half of the distance of the ATR. Why half of the distance and not the whole length of the ATR? Simply because I can get to the profit area faster than waiting for the market to waiting for so many days until the market, it can go to 2 and 3 to 1 reward to risk. So increase the probabilities of, let's say, a 40 pips here, buy limit, 40 pips here, and 120 pips. They should have been hit yesterday. It's not something I traded. If you recall on the webinar early this week, some people, they were saying that they're going to take this trade right on the support. I said after this strong momentum to the downside, I would love to see some weakness here before trade to the upside. If some people, they initiate the trade right at the close and they have the 40 pips or below this doji candle, that was also a good trade. But remember, by the time we went live, the market was already up here, and I wasn't willing to pay 100 pips for 170 pips profit due to that the market is not in a strong trending environment, and I don't like that. Please analyze the dollar index. Yes, we will do that as well. So New Zealand against the US dollar consolidating here. We can expect some weakness, to be honest, though some strength on the dollar. USD CAD just drifting sideways. There are so many obstacles here. This area, it's full of selling orders based on the structure. Bullish engulfing and bearish engulfing shows aggressiveness, and although the market can consolidate a lot before it's going to decide of any direction, that's what I believe. Trying to sell off on the USD against the Japanese yen. Nothing clear for now. We came at this area of resistance. I don't know if you guys had some limit orders. I didn't. Australian dollar is bearish engulfing the previous candle, although the session hasn't closed yet. This is a daily candle. I'm still bullish from this point here. To be honest, if the market is going to come in this area of support, let's go to the 4-hour chart. On the 4-hour chart, we can see that this area, it's somewhere there. We can get it filled in a better price, in my opinion. Let's move on. The euro. So we can see some weakness prior the London Open. Some weakness, some strength on the Japanese yen and weakness on the rest. So Euro yen weakness and Aussie yen weakness, and of course pound yen weakness and Swiss yen weakness, everything. Canadian dollar yen weakness. I don't know, guys, if this is gonna last after the London session and within the New York session as well. Something I would like to comment, it's on the gold before we go to have the analysis on the indices. The gold market, this strong impulse candles to the downside. We said that if the buyers are strong when they appear, they have the opportunity to explode prices and hike this market into a higher prices, but they didn't, because we see that their bodies are so small compared to the previous bearish candle, and it's the same observation with the pound. Similar pattern, pretty much the same pattern actually. But yesterday we closed with this nice bearish engulfing. But the weakness I see is that it closed right on the support, and that's what I hate to see in the price action. When we want to sell after a confirmation of the price action, if the confirmation comes right on the support, maybe it's a misleading indication and better not to get involved. So on the 4-hour chart though, we do have and you can mark this on your charts. We do have a move starting from this point all the way here. All these lows have been taken by this impulse move, and we have clarity on the 4-hour chart. And what can we see? Another thing is this move started from this area. Let's do some 4-hour chart analysis for swing trading. The move started from this. So guys, we have to at this point we have to make it clear, and I would like everyone to understand this. Okay, now we are doing analysis on the 4-hour chart. We take the weakness of the daily chart and we want to do swing analysis on the 4-hour chart. So we don't trade the daily chart. We can trade now on the 4-hour chart. It's a totally different distinction, and traders, they get it so wrong, because although they get the direction right many times, but they don't understand why it takes first their stop loss before the market is going to continue, because they try to do time frame correlation on a swing trading that sometimes it doesn't work like this. We have to use different approaches. So in this scenario here, we can focus that the market can come and tap into this area before it moves to the downside. Let's check if we have some fib retracement maybe stopped at any significant level of resistance. Excuse me. So this is a level of that's the 50%, and that's the 61.8%. Let me remove the fib so we don't get confused. Okay. Now we are at this point here, the market at 50% fib retracement or 61.8% fib retracement can retrace from that area. Okay. But there is a high chance the market to create a deep retracement and come all the way up there. Now, because the daily is not okay, let's explain it differently. If you want to trade the 1-hour chart, for example, you can also see this area, it remains the same, so you can monitor some price action rejection. I don't know if the price will stop here on the 50% or on the 61%, or it's going to tap into it. That's why we use the price action to identify potential areas for potential areas on the chart that price might retrace. Or other traders, they just simply use limit orders, sell limit orders in order to get filled when the price is just correcting. How can you watch webinar if you miss it? I will share the YouTube link later. Good morning. Euro reverses up against pound. Let's check the euro against the pound. Where is the euro pound? Here it is. Well, yesterday we had this stop of the price at this point here. Although my area of consideration is this one. But yes, we saw some retracement. However, for trend traders, you want to buy when the market is back in trend. So you go to the 4-hour charts, you draw your trend line or some fast moving averages, and you see that we have lower highs and lower lows against the prevailing trend. And when we have a break and close maybe we can buy it, okay, because we go with the momentum of the daily chart, and that's a good way as well to trade, another powerful technique. And gas, we are still at the support. Market is just consolidating here. It doesn't give us these trending candles anymore. We went into this area of indecision, and we have to wait and see what's gonna happen. About the Bitcoin, just to have a look, a massive soft on yesterday. We are at an area of support now based on this structure, but if this is going to stay and the market is going to push from this point, I don't know. I still believe that we have more weakness to come. Let's have a look at the indices. The dollar index, it's at this resistance area. This area of resistance, traders, it can create more weakness in the dollar. And if we're going to have more weakness in the dollar, it means we're going to have some strength in the euro against the dollar, pound against the dollar, and the rest. Henry, which time frame is good for entry, 1 hour or the 4 hour? All time frames are good for entries. Depends which one is your analysis time frame. If you do analysis on the 4 hour charts, then the 1 hour it's better because you can get into the market with some reversal price actions before the 4 hour turns. If you are trading on the daily and the market is trending on the daily, let's say, you can find some patterns, price action patterns, or technical patterns like double bottoms or some candlestick reversals to trade. If you're going to find them on the 1 hour or on the 4 hour chart, just make sure that you are trading from strong levels of support or resistance. That's one of the most important aspects of trading profitability, guys, is to trade from levels that majority of the market participants are also looking to buy or to sell there. Okay, that's why we have so many false breakouts like this one here. That was a false breakout because many people, they were selling on support instead of buying on support. Let's have a look at the DAX. Yesterday, we had a nice false break of this area. We left with this gravestone reversal or pin bar reversal. And let's have a look at the 5-minute chart. Let's do some analysis here. We have this area of support. Okay, at this area, that's my structure there. The market so that was from 9 o'clock, it went all the way there. What I don't like to see is the market to break on the upside. I don't want to see the market to break on the upside today because really this is a very dangerous zone that maybe it's gonna reverse. Anyhow, I will put my resistance at the point this area here, touch as many as possible. What about this candle? Yep, can be there. What do you think about the DAX? I believe that a strong sell on the DAX and a strong sell on the FTSE. That's what I believe, to be honest. Purely that's because of the daily chart. Maybe the weakness it's gonna, you see the daily chart, how it is. Maybe the weakness it's gonna come in the New York session, maybe in the London session, who knows? But this is a strong weakness that we can see some short-term sell-off. That will be interesting for me and for many traders, of course. We have this intraday support. That's a resistance. One minute left to see the market where it's going to break. We're going to try to get some pips out of the trade. Preferably, I would like to see the market break to the downside, simply because of the daily price action. And if we're going to break to the downside, we can see a continuation and a strong break. I believe so. As I said, nobody holds a crystal ball and we don't know what's going to happen. But we are ready to take it in either direction. If it's going to break to the upside, until here, maybe we can make some profits. Ten pips, it's right here. That's the FTSE. Breaking to the downside. DAX also doesn't look very healthy here. But anyway, that's the strategy. Yep. All right. I'll close my trade because it tapped into this area. That was a false breakout, so I'm not interested to stay more onto this. And as we said, guys, maybe we can see a false breakout. Preferably, we wanted to take it to the downside, but a strategy, it's a strategy. If we trade consistent what we trade, then that's the only way to experience good results. Let's go back to this one here, Nasdaq. Nothing, Dow Jones. Well done, David. You took a quick short. I'm not interested to trade within this consolidation. For me, the trade was ideally from here all the way to make 10 pips. We didn't manage to take 10 pips, so that's fine. Okay, I think that's all from me today, guys. Let's check the pound before we let's check the pound before we finish. Yep. Okay. Intraday pound looks with this. We have an area, a strong area somewhere here. We can keep an eye on that too. Back to the DAX. All right. So for the next of the day, if you guys gonna trade indices, I'm gonna be around. I will have my my eyes on this for some trends, preferably to the downside, unless it's gonna create higher highs here, and in the New York session maybe it's gonna trade at lower. Who knows? Everything is possible. If you haven't closed the trade yet, maybe you can close with some profit if the market is going to come here, or trade even, break even. Either way, it's fine. All right, guys. I wish you happy trading, and I look forward to see you tomorrow. Sorry, not tomorrow, on Monday at the same time. Thank you so much.